The best levels come from failed levels. Most traders look for areas to buy low and sell high. Very few understand what happens after those areas fail. That's where inverse points of interest come in. When a level that should hold gets violated, it often becomes even more powerful, just in the opposite direction. In this video, I'll break down the concept behind inverse points of interest, why they form, and how you can use them to catch high probability continuations instead of getting trapped fading the move. If you're a beginner and you have been stopped out at a level that should have worked, this is going to change how you read your charts. Let's get right into it. The inverse points of interest is a key concept of basically using flip zones to take advantage of reversals. And these are going to be mainly your early signs that the market here is going to reverse from a higher time frame point of interest or a key zone, right? So what is the technical definition of an inverse point of interest? An inverse point of interest is a level created against the current trend, which later becomes a valid entry zone when the market reverses. Now, in simple form, this means that your points of interest that is currently used to help push price lower or higher will fail. You can use that as a flip zone. Let me give you a few examples right here. All right, you can see on the first image right here that I'm circling over, the market here is creating lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. As the market dumps down lower, you will create bearish order blocks. And bearish order blocks are supposed to help push price lower. But if you fail them, what's going to happen? This becomes an inverse point of interest in which price can use to bounce and push higher. All right, which means that this inverse point of interest or your inverse failed order block right here is going to be an area that becomes a valid entry zone for the market to use to push price higher. All right, same thing. If the market here is pushing up, it will create higher highs, higher lows, higher highs, higher lows, and higher highs. And when the market here creates a shift, how do you know the market here is going to give you a potential area to enter from? Use the failed order block. Same thing, push down lower. All right, it becomes a valid entry area in which the market here can allow you to continue to look for the reversal. Same thing, fair value gaps, right? Simple three candlestick patterns. Candle 1, 2, and 3. Gap between the first candle's top wick and the third candle's bottom wick. Fair value gap. This is a bullish fair value gap right here. If it fails with a body candle close underneath, it becomes a flip zone, an inverse point of interest. Okay, now this lesson here is built on the fact that you have already understood how to mark out order blocks and how to mark out fair value gaps. And of course, how to spot liquidities. These are all done and of course went through in depth in our other YouTube videos. So please go ahead and click on our profile and of course look at those YouTube videos right there before continuing this YouTube video right here. So now, very important. So let me just repeat one more time. Inverse point of interest is an area that is created against the trend, which will then be later used once it officially reverses. Okay, so now, why are points of interest important and why do they exist? Three main points right here that I'm going to go through. When the market reverses, it is a sign that the big banks and institutions are starting to slowly build up their position for a reversal. So in this case here, point number one, your smart money builds position slowly. How do you know that? Visually, when the market here ranges, what's going to happen is that the market is going to break out of that range. Most times, whenever you see a range happen, that first break out of that range is usually a manipulation. Price is trying to fake traders out. People that are looking to impulse short get screwed over. Those that are looking to have their stop loss below for buys, playing the range, they will also get screwed over. And that's where the big banks and institutions, they will step in and look for potential buys of this area. Right? So this is the smart money starting to frame for a reversal. That's number one. Number two, when you have inverse points of interest, what actually happens is you trap both sides of liquidity in the market. For example, earlier on, we mentioned order blocks. Order blocks right here is where the market here is supposed to give you sells. So those that were looking for sells here and they execute without any confirmations, they get stopped down. Then once price comes back into it, they think, okay, look, it's time for price to continue dumping because I guess we are back in the OB. They take sell again, they get screwed over. Same thing for the other scenario. So in this case here, when the market here creates inverse points of interest, it is actually used to take out liquidity on both sides so that the market here can finally move with volume. All right. And number 3, it leaves us an early sign of reversal before it happens. So, for example, in this case here, after the manipulation happened, the market here starts to shift bullish by creating a break right over here. And after we break, what does it leave behind? For example, a bearish fair value gap here that has failed with a body candle close. Once it officially confirms that reversal, price uses that area to come back to test and then further push up higher. So this is your early sign. Once the market here closes above the fair value gap, good. An early sign that the market here is going to reverse already. So that's where you can start to pay attention by spotting these inverse points of interest. Okay, so these are the 3 reasons why they exist, to allow you to capture sniper entries earlier than before they happen. All right. Now, inverse points of interest checklist. What are the things that you need to check before you mark them out and use them? What makes them valid? Very, very important. This is where you're going to have 5 main things to take note of. Write this down. Number 1, it needs to form against the trend. Meaning, if the market is going down like this, creating lower highs and lower lows, the market needs to go ahead and create bearish points of interest to tell you that, look, the market here wants to continue lower, and if price comes and disrespects it, fails it like this, the market can then use this failed point of interest as an inverse point of inverse area to look for a reversal. It has to form against the trend. So once it fails, then you officially turn this into a breaker block. So that's your first criteria, first checklist to making sure that your inverse POI is valid. It has to cause a reversal. All right. Now, the second thing here is going to be creating it with a displacement. What is displacement? In simple terms, those that understand fair value gap is where the market here moves with a lot of volume. When the market here reverses from a certain point, for example, this point here, you want to see the market here bounce, basically give you a V-shaped recovery. Most times, if you see a V-shaped recovery on the chart, what does the market here proceed to do after? Continues trending very aggressively. If you see the market here come down, staircase its way down, and then suddenly staircase its way up, the move doesn't really happen and doesn't have a lot of volume, right? It doesn't really break out with a lot of volume, not allowing you to capture a large move. So if you are basically stuck in the range, you don't want to be using an inverse point of interest, right? You want to see the inverse point of interest be created with displacement. Okay? Third thing, left untested. Things like your fair value gaps, your order blocks, your liquidity points. If they haven't been touched before, that means that price has not come back and collected orders from that area. So if price has yet to do that, then that's exactly where it is going to be best for price to come and revisit that area to collect those orders to look for price to push up higher. For example, if the market here creates a breaker block and price at this point has not came back to test, this area here is still valid for price to come back and retest eventually. So wait for price to come back to tap and then look for confirmations to execute for buys. If it's not tested, it means that there is fresh orders there waiting to be collected. Next thing, it activates only after a change of character. Now, this is extremely important. On streams, you do see me mark out inverse points of interest without a change of character. Those are more aggressive. If you want to use a high probability inverse point of interest, make sure that the reversal is already in play. And the strongest way to tell that the reversal is in play is by using a change of character. Meaning, once again, let me refresh your memory if you don't know what a change of character is. High, low, lower high, lower low, lower high, lower low. If the market here breaks out of this bearish trend and breaks past the most recent lower high, you create a bullish reversal pattern, what we call a change of character. So only once this happens, like that, the market here creates a change of character. Only then does this activate. Can you see that? Okay, look, now I can look for price to come back and tap back into my failed bearish order block, which becomes a breaker block. Last but not least, entry comes when price had returned after the reversal, which is our retest. We need to see price retest. Now, this is why a lot of times when I'm on the streams, and of course doing these videos for you guys, I make sure one of the criteria here that we use to execute is always to wait for that retest. Because it needs to come and refuel so that the market here has a very strong push in the direction that you're looking to trade. So now, let's go through what are the types of inverse points of interest. There are mainly 3 types of inverse points of interest. Number 1, let's talk about the most common one. Breaker blocks. What is a breaker block? A breaker block forms after a failure of a order block with a body candle close. If you see a order block like this, this was initially a OB. If this was the OB and price only wicked past it, it hasn't confirmed that it is a breaker block. If price closes above with a body candle close, if you spotted, let's say, your order block on the 50-minute time frame, the buy to sell, you marked it up nicely. Okay, cool, you're looking for sales. Price doesn't give you any confirmation and it breaks through. It breaks through with the wick, not counted as a breaker block. You must see a body candle close above. Only then you can confirm that this becomes a breaker block. Why is this important? Because this is your extreme area in which sellers are going to be helping push price lower. If it wants to continue lower, it should respect the extreme area of sales. All the sell orders right here are concentrated. If price breaks through it, hey, it's clear. The sell orders here are not enough to push price lower. And in fact, even created a higher high, which is part of a uptrend. So what you can do is always use the breaker block to look for a retest of that breaker block to give you that further push higher. Now, the same ideology is applied to the next type of POIs. Failed fair value gaps. Your fair value gaps, your order blocks, these are areas where you can look to buy and sell from, right? Your supply and demand zones. If the market here fails a bearish fair value gap with a body candle close as well, keyword body candle close, then you know that the sellers are no longer valid. Buyers push through it with volume. And what's going to be left behind? Once again, buy orders. So this sell zone flips into a buy zone, which technically, in terms of the name of this concept, this is called the inverse fair value gap. So you have a fair value gap, and then if it fails, it becomes an inverse fair value gap. Just put the word inverse in front of it, and you're good. So now how do I use them? Same thing. Remember this. Entry comes when price returns after the reversal. Retest. So you want to see price retest that to continue higher. It's very, very important. Now, the last type of inverse point of interest is going to be your session highs and lows. Now, every single day in the market, we got 3 main sessions here that we use. We got the Asian session, the London session, and the New York session. Now, the time zones that you want to be focusing on is mainly the kill zones. Okay, currently, in this current market condition right now, especially with the daylight savings time, you want to be focusing for the Asian session anywhere from 9 a.m. GMT plus 8 to 1 p.m. GMT plus 8. The London session right here is going to be from 3 p.m. GMT plus 8 to 6 p.m. GMT plus 8. The New York session here starts from 9:30 p.m. GMT plus 8 to 11 o'clock GMT plus 8. Any time in between those timings, price is going to move. And when the market here creates a high and low like this, a high here, a low here, when the session ends, or when the kill zone ends, what's going to happen? Price is going to give you those high and lows, so you can mark them out. Draw a high and draw a low. Eventually, price is going to gravitate into either sides of it. because these are liquidity points. If price wants to gravitate into these liquidity points and fail it, how do you fail it? With a body candle close. Not a wick candle close, but a body candle close. Now, this is going to be a bit nuanced, so make sure that you write this down. When you see a body candle close on the 1 hour time frame of that session, that will be your strongest confirmation that the liquidity of that session is filled. Imagine if this is your Asian high, this is your Asian low. People trading within the sessions, they are going to be placing the stop loss above. And if price closes above, that means it has collected all the stop losses and still chose to stay above this level. So this is no longer a liquidity sweep. This is a complete failure of the liquidity point. And that means the sell orders here now convert into a buy orders. Why? Because as price push up higher, it's pushing up with displacement, with volume. So all you have to do is make sure that you look for a retest and then look for continuation buys towards the upside. This is something that we always do whenever we do see a failure of an Asian high, Asian low, London high, London low, New York high, New York low. All demonstrated live on stream as well. Premium members would know this. All right, so there's 3 main inverse points of interest here that we use on a daily basis. Now, these points of interest here, the first 2 can be used on the lower time frame. This one here is mainly going to be used on the higher time frame, like the 1 hour time frame. This one can be done on the 1 minute, 3 minute, 5 minute, this one as well. No problem. You want to use them on a higher time frame? Is it also possible? Yes. For the swing traders out there, yes, you can use this right here on the higher time frame, on the 15 minute, 1 hour, 4 hour. If you see price break through your bearish structure and create a bearish order block right here, and price is giving you a retest, sure, you have a breaker block that you can use to buy from. Right, just a quick example for you. Now, let's move on to how can you use and when can you use inverse POI. There are going to be 4 main times that you can use this, 4 main situations. First one, sweep of liquidity setup. The example that I went through with you all earlier on, the type of POIs, your session high and low. If price action here gives you a respect of the Asian high, London high, or the New York high, and gives you a change of character, what normally happens? I normally look for sells, right? So let me give you an example right here. Price move up, down, like that. Cool. I have the Asian high, like this. Price creates an Asian low, like this. If the market here decides to push up and pushes through the Asian high, sweeps it, does not give us a body candle close, and gives us a change of character like this, that's where I can start to spot, okay, were there any bullish order blocks right here? Were there any bullish fair value gaps right here? If there is, good. When the market here creates that change of character, it activates that. This becomes a breaker block. This becomes an inverse fair value gap. Areas in which price can retest to look for continuation sells. So your sweep of liquidity setups are going to be very, very useful, right? When you do see a sweep of the Asian high or an Asian low or your New York high, New York low, London high, London low, no problem. Once price respects those areas and it starts to give you your change of character, important change of character, start to spot out your inverse POIs, your breaker block, and your inverse value gaps. If you have them, you can always use those areas as points of interest to look for that reversal move. Next one, TRC trending setups. Now, those of you here that are not in premium, TRC is basically a strategy that we use to capitalize on trending markets. And this usually uses higher time frame points of interest. So regardless with whatever strategy that you have, most times you're going to be using high time frame POIs to spot potential buy zones or sell zones. So let's just say you have a 1 hour bullish order block. Price comes down like that, gives you this. Push up higher. You now have a bullish order block here. If you are going to be looking for buys, you want to see price come back into your higher time frame POI. So once price retests into your higher time frame POI, like this, slowly comes down, step by step. Push down lower, push down lower, push down lower. This is a depiction of the lower time frame. Price taps into it, once again, gives you your change of character. Creating lower highs, lower lows, you break past your most recent lower high. Create your bullish reversal pattern. And once again, same thing, this is where you start to activate your bearish order block that failed. OB, right? Your bearish fair value gap coming into your point of interest. All these were all used by right to help push price lower, but price failed through that. So it automatically becomes a breaker block. Automatically becomes an inverse fair value gap. And all you have to do is look for price to retest. Remember, final thing that you need to do is look for price to retest to give yourself an opportunity to look for the continuation bias higher. So higher time frame, change your character, then you retest the inverse POI, and then you continue buying. Clear example of that. Okay, now for point number 3, change your character before BOS. Okay, this is where we want to talk about how the market here is going to give you a reversal already. When the market here is trending towards the downside, creating lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows, and the market here creates a bullish change of character. This is when the market here already confirms a reversal. In whatever situation, higher time frame, lower time frame, you don't really have to care. If the market here has already confirmed a reversal with a higher high and a body candle close, but you don't have any higher time frame POI, and let's just say you want to look for scalps, pro trend, you can always start to see, okay, what caused the market push up higher? If the market here wants to continue to confirm this reversal, what is price eventually going to do? It's going to retest and then continue higher. And when you do continue higher, what's it going to form? It's going to form a break of structure, which represents a continuation of a trend. So before the continuation of the trend happened, right here, you want to be able to spot where could price retest. And once again, same idea. Using failures of bearish points of interest, like your order block and your bearish fair value gap. All these areas, once you have the change character, activates the failed zones and flips it into a buy zone, like your breaker block and your inverse bullish fair value gap. And of course, last but not least, you can always use it for counter trend scalps if you're looking to scalp against the market on the lower time frame. Same exact concept applies. All right. So let me just go ahead and recap right now. Just the theory that we have went through on why inverse points of interest is so important. Number 1, it makes sure that you get sniper entries and you know exactly when the market is going to start to reverse. It's the first sign of the market here showing you, look, once you create a reversal, these are certain points where price can retest to continue that reversal. The footprints that are left behind by the big banks and institutions. And how do you know? And how do you use them? By number 1, being able to spot change of characters. Number 2, understanding and mastering your order blocks and fair value gaps. And when they fail with a body candle close, take note. Those areas can be used as potential inverse points of interest. Those are going to be your early signs of reversal before it happens. Then, your checklist, super important. 5 checklists right here. Number 1, most importantly, it forms against the trend. Number 2, once it's created with displacement, with volume, with fair value gaps. Important. If you don't see V-shaped recovery most of the time, not valid. Number 3, it is untested, means that it hasn't been tested before. That will be the freshest point of interest that you can use to look for trades. And of course, only activates after you change your character here. Once you have that, you have your strongest confirmation already. Just added confluence that the market here can give you, understanding that you have filled a sell zone, plus you have a bullish reversal pattern forming. And then most importantly, look for the retest. Okay, and these are the scenarios in which you can use to look for your inverse POIs. Simple liquidity, your trending setups using your TRC strategy. And number 3, change of character at any point of interest before the confirmation of the continuation of the trend. And the tools that's going to help you use them and catch those entries are going to be these three concepts. Failed order block, which is going to be your breaker block. Failed fair value gap, which is going to be your inverse fair value gap. These are the technical names for it. Your failed session high and low is just a break. So you're going to use that as a failed zone to retest buy. Think of it as a resistance that flipped into a supply. Once you've understood inverse POIs, failed levels stop being frustrating. They become opportunities. Instead of fighting the markets of trying to predict reversals, you should start trading with intent, using invalidations as information. That shift alone can completely change your consistency. If this video has helped you in any way, shape or form, then drop a like and comment inverse down in the comment section below, so I know to go deeper with live chart examples and advanced setups. And if you want to keep building your edge, then don't forget to subscribe down below and turn on the bell notification, because I'm on the live streams every single day during the London and the New York session to walk you through my exact levels, my exact zone, so that you can go ahead and catch these trades with me. And I'll see you guys in the next video.